I think there are legitimate concerns in the US about the way the system has consolidated in the past 2 decades. There are legitimate concerns about the huge size. I mean, the US is a huge economy, so if banks are small compared to the US economy, they can still be very big in absolute terms, and this has importance. So I don't think the US debate was irrelevant or inadequate, and I think the fact that the US has limits had limits on the proportion of total deposits, I think, before the crisis, and some limits have been added by Dodd-Frank. They're fairly high size caps, but they exist. I think it makes sense. In other countries, I think maybe it was a lack of choice, maybe it was partly financial nationalism and the willingness to promote global champions from a small country base. I think we've gone way too far in terms of the size of banks. But the problem is so huge that it doesn't even get debated because there is no way out that is apparent, right? So I think Switzerland is an outlier. They have had a very honest debate about what it meant to have those big banks. But I think generally speaking, a number of countries, particularly in Europe, are still in denial of how large their problem of bank size and concentration is. So I would see the problem more outside of the US from that perspective.